Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start the webinar, the Australian dollar ended the overnight session with mild gains after peaking at the start of the US session at 80.26 before pulling back to 80.15 after the US lawmakers reached an agreement to end the US government shutdown. The clarity over the US government shutdown is keeping the weight on the US dollar and also helping the Australian dollar momentum in gaining further today. But what is concerning is that we have bearish divergence. It is viewed that the market will continue to fail above 80 cents, and if you look back on the last few months, when we attempted to go up there before, the market clearly failed, and you can see the stab action towards the top side clearly indicated the market had no bullish drive. Therefore, I do expect to see further failed attempts, as I mentioned, and look back towards the support that comes in at 79.30.40. One thing to note, though, is next week we do have the release of the Australian CPI report, which may show inflationary pressures in the US economy has soothed. Therefore, this could mean that a rate call from myself from late last year is still valid, and I am looking that the RBA will expect it to start talking about rate hikes and even possibly seeing one in around April this year. Although the RBA will be very much avoiding the situation, I still feel that if that's the case, it may put a little bit of a bullish sentiment on the Aussie. But in the meantime, that's next week to see how the market plays with this divergence and see if we do get a pullback. Well, the US dollar, as I mentioned, with the shutdown of the government being reversed, is now looking towards the European Central Bank rate decision this week. It is viewed that the clarity of the timing of its first interest rate talks or even rise from Mario Draghi may be seen in the statement after the release. Now, the last time this any change in rates was back in the financial crisis. But I expect to see, like all central bankers, Mario Draghi to try and avoid the issue and could try and push the rate hike into 2019. Nevertheless, the roller coaster ride is still likely to be seen this week, but you can see from the bearish divergence, a long-legged doji, an outside range day does support a further downside test to 121.60.65, with the resistance at present seen at 122.65.75. Well, dollar yen come to life overnight and actually still supports the bullish outside range day. Therefore, we could see further gains into today's session towards 111.25 to 111.80.85. Today, we do have the Bank of Japan's interest rate announcement. It is unexpected to see any move from the current level at negative 1.10. However, we should monitor the statement afterwards, as we could get some indication and see a little bit of flourish in the price action. Nevertheless, the market is slightly bullish from the technical point, so I do expect to see dips to be shallow and with support seen at 110.30. Well, the pound has negated the recent blow off top. And from that, we could be looking towards 140 to 141. Now, that being said, it just seems a bit odd that we haven't heard anything about the Brexit talks. However, they are still going on behind closed doors from what the press said this morning. And also what's fueling this move up is the fact that the Bank of England is looking to maybe move rates, or the market's talking of moving rates in February. Therefore, we could see a rise up towards 141 level if that's the case. But what could put a damper on it is two things, is that the Brexit talks, and also we are extremely overbought. So I'm not supportive up at these levels, and I do expect to see the pound eventually turn around. Gold unchanged and still maintains a negative bias towards 24 as the target, which could actually see a further decline towards 1,312. Overall, I'm bullish from there. And I do expect to see the market take on the resistance of 35 to 39 and re-challenge this month's high, where the rejection was in the outside range day to the bear case at 45. Along with silver still maintaining in the bearish case, I still expect to see weakness towards $16.95 and down towards maybe $16.80 and reassess from there. We have seen a test there this morning, but I do expect to see further weakness on the cards, with resistance on the day likely to cap around $17.15 to $20. And rounding off with oil, the market's still poised to the downside with the technicals breaking down. Does look to a target of 62.60 with the resistance still capping around 64.40.45. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the day that's ahead.